Well, hello, everybody. My name is John Panicho, and I'm with Fola Capital, and I'm the host of today's event. I want to thank you for being here today. We're just jacked that we have the turnout that we have, and we've got a lot to cover. But before we get there, let me introduce you to the other two great people I've got with me today. The real star of the show is Myra McDuffie. Myra is the co-founder and current owner of Mima's Chicken and Ribs in North Carolina. We'll get to that in a minute, but how you doing today, Myra? Thanks for joining us.
I'm great. Thank you for having me, John. And hello, Shane.
Hello, how are you guys?
Good.
Good. And Shane is what's called a skill bridge intern. Shane is actually an active duty Marine Master Sergeant. Hopefully I got that right. And he's joined us for a few months to kind of dip his toe in the waters and finance as maybe a career path for him. And Shane is going to be working the gears in the background with any questions or any issues we might have as we go throughout today's event. Shane, floor is yours, man.
Hi, everybody. My name's Shane Stumiller. I am a Master Sergeant in the United States Marine Corps. I've been working with Marine Special Operations for most of my career. And so now I'm just trying to figure out what I'm going to do on my next step when I retire. So this has been a fun adventure trying to learn about finance and help businesses raise money and capital. Like John said, I'm going to be in the back answering all the questions in the text and chat that's going on. And I'll come back up on the screen when we're done to help chaperone into the questions that we have. That's it. Thank you.
Thanks, Shane. A couple of logistical things. We have enabled the chat. If anybody has any comments, reactions, or some of you that might know me want to heckle me, the chat room is yours, but do so at your own expense because we can eject any hecklers. But anyway, all kidding aside, if you have any questions at any time, use the chat box at the bottom. And if you have a question in particular, there's a little question icon you see there next to where you type stuff. Click that button. That'll be tagged as a question. We will have a Q&A session towards the end, and Shane will kind of take a look at the questions, and we'll field questions later. But if you do hit that little question icon, we will know that that's a legitimate question that we will try to answer at the end. If we don't answer your question, we will, I assure you, we will get back to you. If we run out of time or we can't get to your question, we will follow up. Know you've asked that question. We will answer it via email. If you're watching a recording of this, you can send any questions to inquiry@folacapital.com or just hit our website and get in touch with us and be glad to talk to you about anything we're covering today. So without any further ado, we have a simple agenda today. I'm going to give you a little bit of background information on why SLICE exists as an offering, kind of what led to it, and a little bit of context for it, because without that context, it's very difficult to grasp why a SLICE offering is what it is and why we're using it for what we're using it for. Speaking of that, the Creek at Burgaw is one example of a SLICE offering. That's why Myra's here today to talk about her offering. And we're going to kind of apply the principles of SLICE that I'll cover with the realities of a real raise that Myra represents as well. Before we get into all that, Fola Capital is an SEC registered broker-dealer. We're a regulated entity, and as such, I'm duty-bound to share a disclaimer with you, which you're looking at. So I would ask you to pause and give this a quick read, but I'll summarize it for you. We're going to do a lot of generalizations today about a particular offering and a security type, and we might talk about forward-looking projections and things like that. They are only forward-looking projections. They may or may not happen. Really, the bottom line is, folks, look at our website, folacapital.com, for any information supporting what we're going to talk about today, in particular, the offering, the Creek at Burgaw. I'll give you the link later, but everything we're going to talk about relevant to Myra's offering is on our website. We encourage you, if you're considering investing, to go to our website and read all the information there before making an investment decision. So here's our objective today. Bottom line up front, folks, we're raising $5 million under a SLICE offering. And this particular offering is open for only up to 200 investors. And the minimum investment is $25,000. And this particular offering is for accredited investors only. Now, that's specific to this SLICE offering. We're going to talk about SLICE today. It's the main topic. But every SLICE offering is slightly different. And this particular one, just to cut to the chase in case you're wondering, the Creek at Burgaw is raising $5 million under the SLICE offering, and these are the attributes we'll get to later. But before we get there, let's talk about a little bit of background. There's some trends that are changing a couple of things in society today. So first is, let's talk about society in general, in America in particular, right? The wealth gap is increasing. I'll break this down in a little bit more detail in a minute, but nobody argues with the fact that there's a wealth gap in this country and it's increasing. Now, our intent today is not to have a debate about this or be political in any way, but based on the facts, that is true. And the reason that's important to today's topic is there's something we can do about it now. The second thing is, much of our economic development in this country is focused on job creation. Now, there's nothing wrong with that. It's a very noble effort. And what Myra has done with her business for the last 5 years and what she will continue to do with as she expands it is create jobs. So that is clearly an important topic. But what's less talked about is the issue of wealth creation. And investment types like SLICE2 are engineered to create wealth in addition to creating jobs. And that's a little bit about a preview of what I'm about to share with you. Now, that's from the everyday investor, folks like us that can choose to do with our money. It's all about this wealth generation gap, number one. And number two, this issue of focusing as much on wealth creation as we do on job creation in our society. But if you're a business person, on the other side of the fence, traditional sources of capital are extremely hard to get capital from since 2008 for a variety of reasons we won't get into today. But ask any small business owner, and they'll tell you that it's very difficult to get a commercial bank loan these days. If you're a startup, it's almost impossible to get a bank loan. And on the investor side, whether they're angel investors, VCs, or private equity, it's just really, really difficult to get funding from traditional sources, even more so. It always has been, but since 2008, and in particular, due to a variety of factors that came out of the duress of 2008, that's even more true now than ever. But especially if you're in a rural community, like the Creek at Burgaw is a good example of this. If you're in a rural area, it's even more difficult. Community banks have pretty much gone away. There's half the amount of community banks in this country than there were in 2008. Community banks typically serviced rural areas. There aren't as many people in rural areas, so traditional angels and VC, people who give money to VCs, that would care about those businesses in those geographies are fewer than they would be in a major urban center. So in a rural area, it's even more acute of a challenge. So what do we do in this situation where these trends are occurring? Well, we're not all doom and gloom, folks. So one more thing, the rest of us haven't had access to the same private investments that the wealthy have. There's a reason the wealthy have become wealthy, and I'll get into that in a minute. And there's a reason they stay there. And there's been a lot of barriers to most of us being able to do that. And that's the good news. There has been a change that's now allowed all of us to participate in the same wealth building activities as the wealthy do. And I'll get into that in a minute. But let's just take a few steps back for a minute. Because I'm doing the webinar, I'm going to talk about myself because that's kind of in vogue these days. But anyway, I'm going to tell you about the first time I bought my first house. So my wife and I were having our first kid. We lived in a townhome, and we had bought that townhome. And then a couple of years later, my wife's pregnant. We need a bigger house. So we start looking at other houses. And I had owned this house, my first house. And a couple of years later, we sold the house, and we made a $30,000 capital gain on it. You know, the value increased, and we were able to walk out of there with a check for like $30,000. Now, this is like many of you, at least speaking for myself, we had credit card debt. Our net worth wasn't much at all. But by selling our house, we got this huge bump in net worth, and we were able to take that windfall, that capital gain on the house, and then roll it into the down payment on the new house. And then we ended up selling that house. Same thing happened a few times in my life. And our net worth really was enhanced primarily through the ownership of a home. And this is commonly known as the American dream. And I know I'm not alone by going through that experience. Anybody who's owned a home and sold it has experienced that. The second thing we do is we buy cars, right? And back then, I bought a used BMW. I was so proud of it, right? Kind of cost me a lot, but it was worth something. So between the home I had and my used BMW back then, pretty much that defined my net worth, and you'll see why that's important in a minute. But when we look at this wealth gap issue, you all know this, you've all heard this in different contexts, but this is the reality, folks. So, about the 1%ers own about 45% of all the wealth in the world, right? Is owned by the top 1% of the amount of people in the world. Conversely, the flip side is true for most of us down at the bottom here. Only 1.3% of the total wealth is held by 55% of the people. So there's your wealth gap, folks. And we're not here to complain about that. We're here to analyze that and make a point, which was what's driving offerings like the SLICE. So let's take another look, a little bit of a deeper look into some of the dynamics going on here. And this is a key graphic for you. On the left, you see net worth. So in these first two levels, we're talking a net worth of 100K and a net worth of 10K or less. And when you look at the types of what these profiles look like of people with the net worth in these two levels, where their money is, where their net worth is housed in their 100% of their net worth, you can see the breakdown here, right? And the key thing is that most of us have our net worth tied up in what I talked about earlier, our homes, our vehicles. And if we're lucky enough, we've had a company or we've had an ability to put some other money aside into a retirement fund. But for most people whose net worth are, say, $100,000 or less, and this is probably feels comfortable to most of you, right? That's where our net worth is. We hope to put something away for retirement. We get our net worth in these other categories. But statistically, that's true. But look what happens when net worth is increased. When people become wealthier, they do different things with their money. The wealthy create more wealth primarily by investing in two things: their own businesses or other businesses, or real estate. And when they have wealth, that's how more wealth is created. And the sad part is, which I'll get to in a minute, it was pretty much illegal to do those two things for most of us if we were what's called a non-accredited investor. So let's talk about that. The Jobs Act of 2012 changed all that. The Jobs Act came out of the duress of 2008. In 2012, Congress actually did something about the duress of 2008. It took them 4 years. But in 2012, they passed the Jobs Act. Why is this important? Well, Title III of the Jobs Act allowed for small businesses. It allowed for two things. Number one, it allowed for small businesses to raise capital under something called exemptions. There's 6 of them. They're listed here. And our purpose today is not to educate you on these exemptions, only to say that one of the two things the Jobs Act did was it allowed small businesses to raise money under what the SEC called exemptions. It allowed them to be exempt from laws that have been around since 1933 and to raise capital without going public, basically. The second thing the Jobs Act did, the significant thing the Jobs Act did, was for the first time since the Securities Act of 1933, with a few exceptions, for the first time it allowed non-accredited investors, which, folks, is 90% of the adult population. It allowed us to invest in private businesses just like the wealthy do. So when you put these two things together, it's allowing any small business that needs capital to raise capital under these exemptions, and allows all of us an opportunity to consider investing in these small businesses that are raising capital. And this is having a huge dramatic effect on capital raising in this country. And just visually, this graphic comes from a great group called Investibule. That's an analyst in this space. Just to kind of visualize this for you, what it allowed us to do is take 90% of the adult population in this country, and now they have access to these investments. And folks, when you do the math on that, that is a lot of capital that's out there that we're all sitting on, whether we're accredited or non-accredited, and we have the opportunity to now choose to use our money and invest in private businesses, just like the wealthy does. But community capital, as it's known, has a few attributes that are relevant to what we're talking about today. The first one is, it's my favorite, it's called a democratization of funding. And what that means is we all have a vote. We can all decide whether or not we want to invest at all. And if we do choose to invest, we can make a direct investment into a specific business and to support a specific management team that we feel deserves our investment. That's much different than putting our money in a mutual fund or giving it to a fund and who knows what happens to it or who invests in what. But with community capital, much like private placements that only accredited and wealthy have enjoyed over the years since 1933, we can make a direct investment in a private business that we care about for whatever reason that might be. And that's called a democratization of capital. We can vote with our dollars and our investment dollars on who the winners and losers are around us in our community in terms of a business, and we can have a direct influence on that. Secondly, this is happening everywhere. The SLICE model that I'm going to get into next is really an aggregation of some best practices going on across the country when it comes to commercial real estate. If you know me and the people at Fuller Capital, although we had to take a lot of exams, we're not the brightest bulbs on the tree. No, all kidding aside. What we've done is we've studied what's going on across the country when it comes to community capital and real estate. And we've said, well, that's interesting. And really, that's what has built up the framework for our SLICE investing. But it's happening everywhere, folks. It's happening in very rural areas. It's happening in major cities. It's just the community now is funding projects in their community and being led by people that they care about, even if they're not in that community, with direct investments from all over the country into certain projects that people are passionate about supporting. And it's truly great to see. And then the third thing is that it's structured, and that if you go to our website and look at the offering, for example, you'll see a lot of structure there. So all the information that is there to make a good rational decision around whether you want to invest or not, and all the risks associated with it is there. It's very structured. The SEC regulates it. That's the second thing. It's a regulated requirement that certain information be disclosed. And then largely it's automated. I used to own a software business, and the analogy I use is we're applying software to the old-fashioned way of raising capital. And when banks do that, they do a lot of loans. And what we're doing is the same thing for private investing in private businesses. We're automating what used to be a very laborious process. We're using the internet and platforms to reach investors and facilitate an investment transaction. And it's wonderful to see from a software perspective. So really, these three things are really what makes community capital and investment crowdfunding as a result of the Jobs Act and the programs under the exemptions truly innovative, new, and exciting to learn about and participate. And what it's done, folks, it's created a new fourth option for small business people to use to raise capital. The three big doors to knock on were grants, banks, and equity, traditional investors like angel investors, venture capital, and private equity. Those are the three doors to knock on. Investment crowdfunding is a new fourth thing, and that's new to small business owners, but in a more challenging way. And the reason we're doing this webinar is it's really new to everybody in society, right? Most of us, because the Securities and Exchange Act was passed in 1933, which really laid the groundwork for how it's been since then. For us, since the Jobs Act of 2012, it's new to all of us. So part of the challenge is making people aware that this is an investment option that we can participate in. So with that as a background, I'm going to shift gears here and talk about the SLICE offering itself. So SLICE is an investment vehicle specifically tied to real estate, and it actually stands for something. SLICE stands for Secured Loan Investment in My Community's Entrepreneurs and Endeavors, SLICE2. And let's break this down a little bit. So with a SLICE, with any commercial property, there's usually certain attributes that make it commercial property, unlike our primary home. So if you ever tried to buy commercial property, some of you may have done that, the requirements are much higher than for a private home for a variety of reasons that I won't get into. But typically what's characteristic of a commercial property is there's some kind of income coming in as a result of that property being there. Stores pay rent, yeah, et cetera, et cetera. And just like any other property, it usually, although not guaranteed, usually it's real estate, so it will appreciate over time as an asset. So what we've done is we've basically created this slice offering. We've taken opportunities like the Creek at Burgaw or any commercial opportunity, and by using a slice approach, what we've done is we've broken that investment up into pieces. In this case, we've got 200, you're looking at 200 blocks here. And what this allows us to do, it allows investors to do, is get all the benefits of owning a commercial piece of property, but at a fraction of the investment. And let me break that down for you next. The core feature of a slice investment is like any other investment. You get a baseline return on the principal that you invest. So what we've done is, for example, if you were to invest $25,000 into a slice offering a 6.5% simple interest return over some term, in this case, example, it's 5 years. And these are the same metrics Myra's offering, by the way. This is how the investment grows over time. So the main return on a slice investment is just like any other investment, a percentage return on principal. So in this case, a $25,000 investment by the end of year 5 is worth $33,125. But there are other cool features that make this a unique investment as well. So the primary one is the one I just described. And these are in no particular order, folks, and they're not guaranteed to happen or not. But they are features of an offering that make it very akin to owning your own commercial property. The first one is, if you own commercial property, one of the benefits is you're getting the operating income. Well, the same thing happens with a slice offering. Slice owners get their pro rata share of the operating income of the property itself. It usually consists of rent coming in minus operating expenses, leaves a net profit, and that net profit goes to the owners of the property, and the slice owners get their share of that. The second one is kind of neat as well. At the option of the issuer is the small business person like Myra who's offering this to the public. The terminology the SEC uses is issuer because you're issuing a security to the public. So at the option of the issuer, during the term that the investment's in play, in this case 5 years, anytime during that time, the issuer may decide to put up a fixed amount of money and invite slice owners to provide a bid for what they're willing to sell their slice unit back for. So some slice owners might choose to put in a price that's much higher than what their accrued value is, using that first piece, right? The second is some others might just want the cash back and offer some kind of discount to sell their slice back. And many others might choose not to participate at all, and that's fine. But it's up to the slice owner whether or not they want to participate. It basically is a reverse auction, and the issuer then can exhaust the money that they've put up buying back the sliced units that they want to buy back through the reverse auction. And that's how a slice owner can liquidate their holding before the term is up, which is kind of cool. The next one is a refinancing. So in the likely event that a refinancing occurs during the term, so in the case of the Creek at Burgaw, the building is going to be built. Let's just say in year 4, a bank comes around now that the building's built and it's occupied and it's going to be, it's much more bankable, in other words. The issuer might choose to refinance with a traditional form of refinancing, i.e. a bank loan. In that instance, the slice owners get an extra increase in their percentage return. Something like, for example, an additional 2%. So instead of getting 6.5%, the return during that term would have been 8.5% as a reward for being a slice investor and upon a reinvestment occurrence. It may or may not happen. And then the next one, which is really the big attractive feature, is let's just say the building sells before the term is over. Well, in that instance, slice investors get one of two things. They get the greater of the accrued value of their slice investment based on that percentage, or their pro rata share of the building if it sells for whatever it's sold for. They get the greater number. So, the percentage back, the green slice here, the main percentage return on the investment is at least the minimum upon a sale. But if the sales price is, pretty high, then they enjoy the windfall of their pro rata share of that as well. Now, what's not on this slide, and it's probably on a lot of your minds, is, well, what if they don't do any of this and they don't sell the building and the term's up? Good question. Well, one of the neat things about it is, remember, it stands for secured loan. And the secured nature of it is, if the worst case scenario occurs, the term is over, you haven't gotten your money back, the SLICE owners can then vote to force a sale of the property to get their money back. So at that point, the SLICE owners have the right to have a liquidity event, a sale. Now, they might choose not to sell the property because it keeps increasing in value, but they will have then the right to control the property and force a sale or not to get their money back. And that's the secured nature of this security. So that's how a SLICE operates. The main one is the percentage return, and then these other scenarios, which are likely with a commercial property, and they're all kind of addressed in the SLICE offering. The details of this particular offering are in the offering memorandum on our website, if you can check it out, and I'll give you the URL to that as we get on here. But that is a SLICE offering as a generic sense. So what I want to do now is turn it over to Myra, and she's going to talk about the Creek at Burgaw, her business, and why she's using the SLICE offering and some of the features around it. Myra?
Hey, thank you and welcome everybody. I'm glad that you're here to learn more about the SLICE and what's going on here in Burgaw with the Creek at Burgaw. We are so grateful and excited about being the anchor tenant here at the Creek. This is the outside of the building, and this is what it looks like. As soon as you come off of I-40, this is what you're going to see and enjoy, and it's going to say Mima's Family Restaurant. Next slide. Mima's is owned and operated by myself and my husband James, who served in combat Marines war with the Marine Corps, and I am a 30-year healthcare worker, provider. I'm a respiratory therapist, and we decided in 2016 to start a family-owned restaurant where you can still come and eat a home-cooked meal and enjoy family time and in an environment that's safe and just cool, a family-oriented restaurant where you're going to get a home-cooked meal like grandma used to make. Next slide, please. Wow, Mima's, we've grown so much in 5 years. So being in Burgaw, which is a rural area who did not have a restaurant such as Mima's, and we wanted to bring that here. We have, you see the car here, you see the trailer, the catering trailer, that all came back after COVID, post-COVID or during COVID. We didn't have a delivery car when we started. We didn't have a catering trailer. We had to pivot the way we do business after COVID to survive and to still serve this community. You will see this map here. We change the color of the pins every 6 months, and every continent and state and country is really represented. We're very proud of this map because in these 5 years, everybody has come through getting off of I-40 to come visit the Eastern Carolina and stop in Burgaw, who probably would not have otherwise if Mima's wasn't here. They come and enjoy not only the home cooked meal, but then they enjoy our barbecue sauce, our rub, which we started here. Mima's has grown so much, which is also the reason why the Creek is very important for this community, is because we want to bring a tourist attraction where you will see us manufacturing the barbecue sauce, which is now being outsourced. And by the way, that barbecue sauce and rub is in over 30 Lowe's food stores across North Carolina right now. So in 5 years, we've accomplished a lot. A lot of people know about us. We want to scale our business to move more into, we have venues, we do a lot of caterings to bring family-oriented activities right here in Burgaw. And we're very proud of that. We want all of you guys to be a part of that. So that's what we're doing. And that's why the creek is very important to this area, because we need to grow the area, not only in providing jobs and bringing wealth back to this area, but also so our children can grow here, live here, play here, and come back and work here. And they have a place to, come back home to. Next slide, please. These are some of the awards that we have won in the 5 years. We've been published 6 times. We're up for 2 more awards just this month, and we're very proud of that, to bring that here to Burgaw. We've been voted number 8 in the state for best barbecue in 5 years. And there's 265 barbecue restaurants here. So we're very, very proud of the many awards and accomplishments in 5 years. Another reason why the creek is very important, and we're so happy to be that anchor right there in that location for small businesses. Next slide, please. The Creek's mission is to provide quality and unique services to Burgaw, Pender County, and surrounding communities, as well as our visitors, and include dining and shopping. This is so important, and I'm happy for the commercial management team to secure long-term leases. That makes your SLICE that much more valuable, because we will have long-term leases for folks to come here and shop and dine here. So that's very, very important for this area. Next slide, please. The Creek will offer Mimon's Chicken and Ribs as the anchor tenant. We got the rental venues I'm so thankful again to the Job Act of 2012 for us to be able to invest in this way. Let me just say this, which I forgot to say. After COVID, before COVID, when we started on this venture, we were financed by the bank. Post-COVID, they took some funding from us, and we decided to go this way of funding to give the community the opportunity to take part in this, because we still can make it happen, and everybody can get a piece of or share in that wealth right here in Burgaw, or even if you're not here, scaling it to other places where they can participate in the growth right here in Burgaw. But the retail stores, the commissary kitchens, the catering service, the out parcel leasing, all those things are important and they're needed, and small businesses will be able to grow right here in this town. Next slide, please. Being a destination dining, this is just a picture of what it will look like. There's 2 buildings. We'll be able to take 2 tour buses, because we are located right off of I-40. 2 tour buses will be able to accommodate them at one setting. We have the tractor trailer loading dock, where we can manufacture our own barbecue sauce. It's a tourist attraction. You'll be able to see it being made and produced, buy it, taste it right here, and take it home with you. The other parcel will have, again, retail stores. Everything will be leased out, because we have a commercial management team to handle those logistics for us. We planned on putting a water feature out front, so it'll be very attractive and, again, family oriented. So everybody being part of this 19,000 square foot venture here in Burgaw, it won't be a disappointment, and success is all over it. And the need for it to be right here at this time in using this venue is just the perfect way for us to participate in this opportunity. Next slide, please. Oh, that's it. So I want to thank you guys for your time and your consideration. Please get back with Fowler Capital. Thank you guys, also Fowler Capital, for taking on the Creek at Burgaw project and helping us raise the money for everybody to understand what a SLICE is and the importance of doing it a different way. Appreciate you.
Thanks, Myra. Good summary. Got some good questions coming in as well, which we'll get to in a minute. Just want to kind of cap this off by summarizing some of the things we're talking about. This particular offering is what's known as a Reg D 506C. That's a bunch of jargon to say. It's accredited investors only. This is the strategy we're taking. It's an opportunity to support affinity groups too. We didn't really mention that. So clearly it's a award-winning woman-owned small business. It's also a veteran-owned, given her husband James's involvement in the Marine Corps. He's actually at the restaurant right now working hard. But it's also got a veteran-led element to it. And, it's minority-owned as well. So folks that have an appreciation for those affinity groups, no matter where you're located in the country, that's another reason to support folks if you're into supporting groups like that. The security type is a SLICE2 unit that we've type investment vehicle that we've described today. And again, the total offering amounts $5 million, and they are a North Carolina corporation. So in effect, what we're doing is what I said, right? We're investing in a slice of a commercial property project known as the Creek at Burgaw. And here are the benefits of doing so, just to summarize things before we get to questions. First of all, the anchor tenant here is not a new business. We're not building an empty building without a plan for rental units. We also already have commercial real estate agent involved with filling the other units. And there's 2 buildings, and Mima's is the anchor tenant, the largest footprint in the first building. But this is not a startup business. This is an award-winning, proven 5-year-old business. And you saw the pin map there. I go to the Mima's quite a few times myself, and that pin map is pretty amazing. There's people from all over the world there, and everybody falls in love with Mima's and the products in particular. But if you don't live around Mima's and you can't go to the restaurant a lot like I can, you want something from Mima's, and that is really driving the expansion effort, particularly around the manufacturing aspect of the expansion. With Lowe's Foods, which is a big deal now here in the southeast part of the country, carrying the product is further evidence that there's more business to be had if the business could scale, and the facility would facilitate the scaling of the business. It's a rural development project. Beautiful example of a rural development project. So North Carolina is a fast-growing state. The town of Burgaw, that area, is a fast-growing part of North Carolina, so it continues to grow. But it is still a rural area, but it's a good example of a specific business being good for the community and being located in a rural part of the country. Again, it's democratization of capital. It allows anyone hearing my voice right now the opportunity to consider directly supporting a project and knowing where your money's going. You're having a direct impact on a very specific project at an investment level that's quite below what traditionally you have to invest in to get the same benefit of supporting a specific project. And it's what's known as an alternative investment class, and that's actually exciting. So it is an alternative investment class to traditional ways of investing. And because of that, part of the challenge is it's new. It's new to financial advisors, and there's a lot that's unknown about it. But rest assured, we're a regulated industry, and if you look at the offering on our website, there's plenty of information that's traditionally there for a traditional investment, but it does fall into the alternative investment class, and therefore is not that well known. But because it isn't an alternative investment, the good news is, and we haven't talked a lot about this, but I do want to mention it today, self-directed IRAs can be used to fund this type of investment. And the beauty of a self-directed IRA, there's a couple of cool things about that. Number one, these days it's really inexpensive to roll over some money into a 401k into a self-directed IRA, or take an existing one and self-direct some of those funds. We have a partner called Also IRA integrated into our platform that allows that to be done easily. And the relative cost compared to how it used to be to have a self-directed IRA and a custodian for that has come down. But secondly, and more importantly, the financial gain that's achieved through the investment of a SLICE offering that we discussed, when that windfall happens, when that gain occurs, the gain is tax deferred because it goes back into the IRA. So that's a huge, unique thing about investing out of a self-directed IRA. So with that, we have some good questions that have come in. We got a few minutes to address them. Shane, I haven't been staring at the chat. You got some questions you want to lob my way?
Yeah. The first one I would like to address is, John, how is Fuller Capital integrated, and how does Fuller get paid out of this opportunity? I did provide an answer already, but I'd like to hear it from you.
Okay. Yeah, our fee structure is transparent. It's on the offering site. We get 8% of the amount raised, and that covers all the expense of the escrow agent that's required from a regulatory perspective, the background checks, the on the investors and the issuers, and the attorney's fees and all the fees going into what it costs to do an offering. Good question. By the way, one more thing, we don't take any kind of equity stake in any of our projects. Hopefully that answers the question. What else you got there, Shane?
The next one, which I didn't answer yet, would be directed towards Myra. It's how exactly did the bank take funding from MIMAS? There's a question that came up during your spit in the middle of it.
Yes, I was trying to type it in real quick, but I'll answer it online. We pre-COVID, we had qualified for everything. By the way, the land is free and clear. We purchased the land outright before COVID, and then we went to the bank to and dealt with Clark Hip Architectural to do the plans and everything for us, and we had qualified for everything. But then post-COVID, of course, our business changed like everybody else's. And we had to pivot differently. We had to move differently, but we remained open. We put a tiki bar outside. That's where the delivery car came in. We started online ordering, call-in ordering. But when they reran our numbers, they didn't qualify us for what the total amount that we needed. So we raised $200,000 on our own through a GoFundMe, and that still wasn't enough. So that led us to Fuller Capital to try to raise the money in a different way.
Thanks, Myra. While you have the floor, what about the flood and hurricane risk for the property? Can you address that, where the property is located? And
yes, the property is located. It is located during the hurricane we had Florence. We drove out in the truck to see what was flooded and what's not. And this piece of land was high and it wasn't for sale. And we had a realtor contact the owners. They didn't want to sell it. And after about 3 months, they decided to sell it to us. So the land that we purchased is really high and it's not in a flood area.
Thanks, Myra.
Excellent location.
Ben's asking something about, help me out here, Shane. Can you buy more than one slice if you want to? Yeah, and you've answered that. Yes, you can invest more into a slice offering merely by investing in more slices. So if you want to invest $50,000, that would be 2 slices, and you get the scalable benefit of that in the investment itself. Great question. Help me out here, Shane. Anything that I've missed here?
Yeah, the last one that we have coming in is they're a licensed 501c3 nonprofit organization. Would they be able to use an opportunity like this for them?
Good question. I'm going to have to get back to you on that, Rochelle. So that is a good question. Probably is my immediate answer, but we haven't been asked that before. So you would be an issuer, and your organization, the 501c3, would be an entity issuing this security. I don't see why not, but we will do our due diligence and get back to you with the correct answer. That's a great question. I just don't want to give you the wrong information. But we will get back to you. We have your contact information. I don't see any other questions there, Shane. Shane or Myra, have I missed anything before I close it out?
No, I can't think of
anything. No.
Great. Well, Myra, I want to thank you for your time today. I know you're a busy woman, and thank you for your time and for your leadership on this project. And we're pretty confident that we'll be successful. We're in the early days of it. It's been a heck of a journey so far, but really applaud your efforts. And what we didn't talk about, folks, that I don't want to belabor you on, is all the good that they've done in the community. We skipped over that, but if you do your research, they've been on the news and everything for a lot of good they've done in the community. So for that, on behalf of the community, I want to thank you, Myra, and for you and your husband's work in that effort. But that does conclude the event for today. If you're watching the recording, please check us out at folacapital.com. Inquiry at Fola Capital allows you to get in touch with us, or you could just give us a call on the number on our website. I did put a call to action up there for people on the live session. If you hit that button, it'll take you right to our website and the Creek at Burgaw offering in particular. And the website has all the information you need to make a sound investment decision on whether this is something you want to invest in or not. And again, we've just summarized it in today's event. So, folks, thank you for making time. Thank you for your interest. Have a great day, and we appreciate it. Take care.